Hey, welcome. Today, we are pulling back the curtain on the engine that powers, well, pretty much everything, from the phone in your hand to the money in your wallet. We're talking about financial markets, and we're going to break down exactly how they really work.
I mean, think about it. Every huge company, every game-changing invention, it all started as just an idea, right? But an idea, no matter how brilliant it is, needs fuel to become a reality. It needs capital. So where does that money actually come from?
Well, the answer is in the financial markets. Now, I know that term can sound really intimidating, but it helps so much to think about them in a simpler way. Just think of them as funding markets, because that's really their whole purpose, to be the one place where people who need funding can meet the people who have the capital to invest.
Okay, so to really understand how this all works, we're going to break it down into two essential connections that these markets make possible, not just locally, but all across the globe. First up, let's talk about how these markets fuel business. This is the connection that turns a brilliant plan that might have been sketched on a napkin into a real company that can actually build something, hire people, and sell a product.
You know, this quote from our source just sums it up perfectly. It's really a partnership, isn't it? Businesses have the vision, investors have the capital, and the market is just the meeting point where it all happens.
So, how does this connection actually happen? Well, it plays out in a few pretty clear steps. First, a business has a plan, but it needs what's called seed capital. That's the initial cash to get everything up and running. So, an investor comes in and provides that capital, and in return, the business gives them something incredibly valuable: equity. And what is equity exactly? It's really just a small piece of the company, a share of the ownership. And this is so important because by offering equity, the business isn't just taking on a bunch of debt, it's making that investor a partner. Everyone now has a shared interest in seeing the company succeed, which is way more favorable than just a simple loan.
And that's the magic of this first connection. It's what turns those innovative ideas into actual real-world businesses. But you know, it's not just companies that need funding. Let's look at how this same idea applies on a much, much bigger scale. Like with entire countries. Yeah, because it's not just businesses that need funding. Governments do too. And this second connection takes us into this massive, often kind of hidden world of currency markets and how they help power entire nations. The main stage for all of this is the foreign exchange market. It's the global marketplace where all the world's currencies are traded. And believe it or not, governments use this as a critical tool to manage their funding and keep their economies stable. And how they do it is pretty fascinating. They use this mechanism called a currency swap. It sounds complicated, but it's basically an agreement where two parties, let's say a country's central bank and a big global bank, exchange huge amounts of two different currencies. But here's the absolute key. They also agree to pay the interest rate on the currency they get. That's what makes it a swap and not just a simple trade. Let's just break this down. As you can see here, the central bank lends out its local currency, and in return, it pays the interest on the foreign currency it receives. The other party, it does the exact opposite. It lends a foreign currency, like US dollars, and then pays interest on the local currency it gets. See? It's a perfectly balanced two-way street. Okay, I know, that might seem a little abstract. So how on earth does a high-level currency swap between giant banks have anything to do with the actual foreign cash you might have in your wallet after a vacation? Well, there's actually a direct line. So when you exchange your leftover euros or dollars at a local currency exchange, that place doesn't just stick it in a drawer. It sends that foreign currency up the chain to the nation's central bank. The central bank then pools all of this foreign money from thousands and thousands of transactions into one massive account. And that becomes the nation's foreign exchange reserves, a critical stockpile for emergencies. So at the end of the day, that whole complex system of swaps and exchanges, it serves one simple but vital purpose. It allows governments to build up the foreign currency reserves they need to keep their economy stable, especially when a crisis hits. All right, so we've seen how these markets fuel both brand new businesses and entire nations. Let's zoom out and really connect the dots on why this whole system is just so fundamental to every single one of us.
The key takeaway here is both super powerful and surprisingly direct. These markets aren't some kind of sideshow for traders on Wall Street. They are a vital, indispensable instrument for the success of both business and government. They really, truly are the engine.
So what should you take away from all this? Look, if you remember anything, remember this. First, financial markets are really just funding markets. That's all.
Second, they're how great ideas get connected with capital using equity. Third, they help governments stay stable by building emergency reserves through things like currency swaps. And finally, when you put it all together, you see that they are the engine of the entire global economy.
This huge, invisible system of connections is powering our world every single day. And that leaves us with one pretty critical question. If this is the engine that drives everything, what happens when it breaks down?